Hi, Phil.
Hello, Tzakhi.
Um, Thanks for coming. We're doing another episode of the Meet.Capital podcast for startups. And I'm very privileged and honored to have Phil McSweeney with me today. Um, Phil, you have such an interesting bio for early stage startup founders, which are our audience. Um, I know you've done a lot in the world of startups. You're on the board of a few startups. You've invested in many startups. And you've written a book about how angels think, which is called Angel Think, very appropriate,
Yeah,
which
yeah,
helps founders understand how angels think so that they can connect with them in an effective
yeah.
way. And I think that's super important and interesting. Um, would you like to add anything about your bio for our listeners?
Well, let me say thank you for inviting me to be on your podcast, which is great. And yes, I am a chair of a company, a NED, a mentor and advisor for a few other companies. And I've been in the sector, startup land, 16 years. And during lockdown, during COVID, I decided to try and write down some experiences of what I'd learned from lots of founders pitching to me for money, and to help founders, particularly early stage founders, realize that they're in a very difficult contest, a competition, to try to get um, competitive advantage, to be at the front of the field, if you like, when they're trying to raise money um, from investors, because various statistics I see, 5%, 10% probably of most of founders actually get invested in. So how do you get into that small group of successful people that raise money? Um, uh, because if you're going to grow, if you're going to scale, you've worked out that you need it.
Yeah, yeah, and I think an important aspect of being one of those that are able to raise is the ability to connect with your investors. Um,
Yeah,
I think it's always true. I mean, I think also when you get a VC, you're also, in the end, talking with one of the partners usually that is leading the investments,
yeah,
but it's especially true with angels that are individuals. And in the end, it's the founder or the founding team and that individual and how they connect and how they collaborate and how they work together. Um,
yeah.
and I know a lot of your book is about that part, the human aspect of the connection between the founders and the angels. Um, let's try to kind of just from the starting point. What is the best way to start building a good relationship with an angel um, when you first meet them? Let's say.
Um, I think it's I think the challenge occurs before that, which is how are you going to get to meet them?
Okay.
Because you can do what a lot of people do, which is like blind. You go onto LinkedIn, you find all these people that have got angel in their profile, or you buy lists of angels or investors, and you just blindly kind of shotgun market your pitch deck out there and say, I'm doing this, I'm doing that, whatever. And in almost all cases, it leads to nothing and it's a waste of time because you haven't done that bit that sort of um, attempts to match up what you're doing with what an investor's interest might be, the kinds of things they're likely to invest in. So I think you need to do some work first to try to narrow down your ideal investor, what they look like, what they invest in, um, what they've invested in recently, have they had an exit, etc. To find out what you can. Um, but if you're very early stage, I think another thing that founders often do is come to an investor with the finished product and say, I've built this, would you invest in it? Whereas, often angel investors, if they've got some particular expertise in your sector, might be interested at an earlier stage, saying, I've been in this sector for a while. I've got some ideas. If your product did X, then you're more likely to get a market. You're more likely to sell it, or you're more likely to get people invest in it. So I think you've got to try and do some early relationship building with some people that you've got to search out, through networking, through asking around, getting people to refer you to other people and so on. But when you can get to that point of having a meeting, and normally people want to see a pitch deck, as a precursor to having a meeting. A pitch deck often acts as a filter. It enables an investor to say, I'm really not interested at all. But if you get to that meeting, then I think it's important to just simple things, to be able to build a rapport with somebody, to not. I sometimes meet people that say, you're the investor, hi, coffee, let me pitch, and they're kind of straight into the business without saying, it'd be interesting to hear a bit about your background, where you come from, what's led you to, being interested in this sector, and what common ground have we got that we can, that when we meet next time, we would be able to discuss,
Yep.
Did you go to the same school? Have you got kids that play for the same football team? Those kinds of human things, that are important in a relationship.
Yeah, I think, well, a couple of thoughts about what you've said. Well, first is, angel investors come in all kinds, and there are investors that want to purely invest and are just looking at the opportunity. And there are investors that want to be involved, and they're only in it if they're really close up with the founders, either advising them, sometimes even joining the team early on. And I think it's important to kind of distinguish between that and try to identify that early on, even before the initial outreach. And I'm curious to hear what you say about that. Another point is there's the initial outreach, which I actually do believe it can be often technical, just as a kind of filter. We do ABC. We've achieved ABC, and now is that interesting enough to start the conversation? Once there is a conversation, I think any conversation with anyone in any business context probably should not just start with getting straight to business, unless I don't know. There's really a request for that under certain special circumstances. But usually, business starts with creating some kind of rapport and some kind of human connection. And with angel investing, probably even more so, especially if the angel investor is of the type that wants to be involved.
Yes. I think if you are a pure passive investor, you're not really too bothered. Whether it's right or wrong, but you might not be too bothered about the skills or attributes of the person themselves. You're making an investment decision on the business case, really. So you might say, well, you might as well spend a lot of time looking at crowdfunding platforms, because you rarely get to meet, the founders in any depth at all. You're just putting, some money against a kind of good idea, good business case, good financial projections, some talk of exit in the future, etc. But if you want to get to, and I think in my experience, more people would like to do this than do, and it can be difficult finding the time, but people buy from people. There's this know, like, trust kind of line, if you like. You get to know people. You work out whether you've got some chemistry with them. You get to trust them, and then you're much more comfortable in giving them, certainly larger sums of money. You don't tend to give large sums of money to people that you don't know, as a rule of thumb. And that takes time, to build that relationship. You might want to meet people 2 or 3 times rather than just once to do your kind of human due diligence, if you like.
Yeah.
As well as, you know, what you'll find in their data room.
Yeah.
Yeah.
Okay, so we've got to the point where we have a founder meeting an angel. What is the right way to approach it? How to build that relationship from the start?
Yeah. I think as a founder, you need to be aware that investors are going to be looking for certain things, and they, you know, whenever I talk to serial investors or VCs, they say the decision about whether I'm going to invest is largely about you. You know, and I've heard people say it's 60% you, or it's 80% you, or it's more than 80% you. You know, and the idea, you know, if you think someone is really competent, then you're fairly confident that whatever idea they talk to you about in the first place will not look the same in 3, 4, 5 years' time. You know, they'll have adjusted to the market, they'll have pivoted, you know, they'll have reworked it in some way, shape, or form. So the idea is not critical in the form that you present it, so long as, you know, I form the view that you are flexible, that you can adjust, or, you know, to whatever adjustments that you need to make. But the things that you might look for as an investor, you know, sizing up a founder is, you know, certain attributes like do they have belief in themselves, regardless of what they're pitching? You know, are they a really confident person that could do anything, whatever it was? Do they have ambition? You know, whatever it is that they're doing, can they scale it? You know, are they committed to want to make it bigger? You know, bigger and better. And have they got, you know, that kind of basket of things that people call determination, resilience, grit, the ability to, you know, get up again after they've been knocked down? Can they run through a wall? You know, these kind of analogies that people use. You know, one of my favorite ones is, you know, can you be thrown out of a plane and build an aeroplane before you hit the ground? I mean, it's, you know, it's these kinds of qualities that you think this person is a winner, this person is a survivor.
Yeah,
So
I think you're right about that in the
yeah,
book about coming off as a
yeah,
winner and presenting yourself that way
yeah,
to an investor.
yes, yeah. So, you know, and I suppose that needs to be balanced a bit with some humility. That you are looking for people that are curious, that are going to learn, you know, that might listen to other people, and I mean, you invest in people that can be self-opinionated, fine, you know, headstrong, you know, great. When it kind of gets too much towards arrogance, like I just do not listen to anybody at all, then, you know, that begins to be a bit of a red flag, I think.
Yeah, and how to start that kind of relationship in terms of when coming into a meeting? Is it just about kind of adjusting yourself uh, to the investor in terms of how you tell the story? I mean, one thing that I wrote about in the past is about also being very attentive and listening to what the investor is interested in, and
Yeah,
you know, showing some empathy to their needs and their interests, and doing that right from the
yeah.
starting point.
I think that's important, and, you know, you're trying to get to a match, if you like. It's a long term relationship, I think that if you might decide, as from you might decide about certain investors that they're not for you, and I think it's important, as a founder, to make decisions about people that you want to work with, and that you'd rather not have on your cap table, because they don't bring what you want in addition to money, and I think founders find it quite difficult sometimes to turn down anybody's money because they need the money. The money is kind of almost the most important thing to them, but I think they need to sometimes think about that. But
a winner is
I
not a
also,
beggar. I mean, coming back to your previous
yeah,
point, if
yeah,
you come with
yeah,
confidence, then you also have the ability to say no, even when you're
yeah.
offered something that you want, if it doesn't really match what you need.
I think one of the worst qualities a founder can exhibit is neediness.
Yeah.
I'm desperate for you. I'm desperate for the money. But you have to, as you say, you have to be confident that you've got a great idea and you're the guy to deliver it. And then if they want to jump on board with that, then all well and good. I think the things that help, from a founder's point of view, to present to investors is where they've got their purpose from, and so it might come in an origin story or a founder story or a road to Damascus experience or whatever. The reason I'm doing this is because, and not, some people think they haven't got a good origin story within them, but I think often if you talk to them and kind of dig a bit deeper, you can usually find that they have a motivation or a purpose for what they're doing. So I think that's one thing. And then I think that the other thing, I think, is their ability to paint a vision for you of what they're trying to achieve, that shows the scale of their ambition. They are they're bringing a product or a service into the world to change something for somebody. It might be a niche of people, might be quite small, but it's important, or it might be a bigger group of people. And when you lay out that kind of vision, what you're, as a founder, what you're trying to do is offer the challenge to an investor to come on that journey with you. And I often, just because it's, a kind of well-known example, I think about Christopher Columbus in this, as an example. What people were looking for at the time were whether there was a different route to get to India, because they were having to sail around, the southern Cape of Africa to get to India from Spain and Portugal and so on. So it was taking, weeks and weeks and weeks, and cost and shipping. So he said, look, I'm going to try and find a different route to India by going west. And so he just presented this vision to I think the King and Queen of Spain, I seem to remember, and said, join me, you need to fund my ships, but what I will find will be treasure, riches, wealth, a different route to India and so on. So I'm kind of laying out the challenge to you to join me in this journey. And I think there's a kind of emotional attraction there, from investors to participate, to be part of the pioneering, if you like, of delivering this vision.
Well, I think often an angel investor is someone that has already done something in their life, and probably at a later stage of
Yeah,
their life, and the founder is often at an earlier stage and just building themselves and their company, and for the investor, there is an opportunity to kind of relive the adventure part of the journey and the early
yes,
days. And I think there's a
yeah,
lot of that on a psychological level
Yes, it's a kind of vicarious thing, isn't it?
Yeah, yeah,
Vicarious excitement or something. Yeah,
yeah, and the and I think I mean founders need to remember that they're offering that opportunity to investors.
yeah, yes, yeah. Going back to what we were saying before we started recording, which is um, be the prize. I am the prize.
Right.
You're investing in me because I'm going to deliver this.
Okay. There's one more question I wanted to kind of bring up because I think we kind of touched upon it previously a bit, but it's something that a lot of early stage founders come across, which is they need the money, they need to raise money, they need a lot of help in many ways, but primarily they need money to just move things forward. And they meet an investor, an angel investor, and a lot of the time before an offer has been made to invest, there's maybe an offer to advise or work together in some other way. And how do you think founders should see that kind of offer treated? Because on one hand, a lot of founders are afraid of people that are just not really intending to invest and trying to take equity for and
Yeah,
take it, and it's out there, it does happen that people take advantage of founders in that way. And on the other hand, um, uh, founders do need help, and sometimes
yeah,
an investor might be a potential investor, but they just don't have enough certainty at the time of the encounter to make that investment, so they want to stay
yeah,
involved and maybe try to advise for a while before they go into investing. So I just
yeah.
would like to hear your thoughts on this, and how should founders think about it?
I think founders need a certain wariness because I hear quite a lot of stories, from people, saying this on LinkedIn, for example, and one or two personal experiences. There are some people that pose as investors with the view to trying to sell you a service,
Right.
and they're not serious investors at all. But um, and you approach them because you need investment, and you get into a conversation, and suddenly they've got they want to build you a website, or they want whatever they um, and and I think a founder needs to ask some pointed questions like how many investments have you made? In what companies? Could I talk to founders of those companies? When was your last investment? What kinds of size of investment um, do you make? To try to kind of wheedle out, people that might not be serious investors. Having said that, there are other roles, if you like, that founders um, could value more than some do. Um, and so I'd describe two briefly, and sometimes they come in the same person, but there might be a mentor that's got, quite a lot of experience in the sector that you're trying to build into, that might be able to say, with my experience from what I know of the sector, do this, don't do that. These are the mistakes I've made. This is what the market's looking for, etc. And you would benefit from their advice. And they may or may not invest, and you can't guarantee that, but their advice is worth having. And then there might be people that I would call accountability coaches or accountability partners that may not know a great deal about your sector, but that you might work with because they help keep you on track. They're the people that you would discuss the milestones that you're trying to achieve, the goals that you're setting yourself for, the people that challenge you and say, last time we met, you said you'd do X. How's that going? What obstacles have you got? can I help you talk through or get around some of those obstacles? So they're kind of discretely different roles, but you might find them in the same person, and you might find investment in the same person. So there's kind of three pots there, if you like, that I'm talking about.
Yeah. And I think a lot of this can be also solved by doing prior research, which is the point.
Yeah.
I mean, if you look at someone's bio and they're an investor, but they're also CMO of a marketing agency, not out of bad intention, they're likely to try to offer you services from their digital marketing agency. It's just
Yeah. Yeah.
And you can it's actually quite easy to see those things in advance if you look for them.
Yes.
I mean, if you
it
look at
happens.
someone's profile on LinkedIn and
Yeah.
they're clearly offering a service and they're an investor, I'd say here you should be more pessimistic than optimistic about reaching out to them, because if what they say on their profile is that they want to sell you something, then that's what they'll say to you when you meet them. It's just most
Yeah.
likely. So that's just
Yeah.
one of the things that founders should probably look out for and use as a kind of screening criteria before they decide to approach an investor.
Yeah. 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 I mean, investors generally have day jobs, so what is it,
Yeah.
Well, I mean, some are retired, but, but some people like the idea of a bit of consultancy, in their semi-retirement. So, I often mentor people that are in role transition themselves. They're looking to get into the advisor space, with in the startup world, because because it's an opportunity for them. So.
Yeah. And what these are people that have experience in working with startups previously, or just people that have professional knowledge?
Yeah, often not. They, if I painted a kind of pen picture of them, they might be in their 50s, thinking about the third chapter of their life, what they might do in that third chapter of their life when they come out of a kind of corporate environment, how they might use those skills, of managing large teams of people, working internationally, being a leader, etc. Where could they apply those skills, and still be, or be thinking that they're semi-retired, as it were, not drawing a big salary somewhere, getting rid of some of that stress and pressure. But they might think, well, here's a burgeoning startup sector, where, as you're saying, lots of younger people without some of those skills and experiences might benefit from that. So can we get into some partnership arrangement where it might be pro bono to begin with, but when you get to a Series A sort of size, then you can begin to pay me a fee, an advisory fee.
So you think a good advisor for a startup, if they're starting out, would offer a lot for free just to startup founders to help them?
I think at an early stage, if you're pre-seed or seed, and an advisor should be cognizant of your own financial position, I think, and not. So if you're trying to raise money and you're successful, you wouldn't want, or as much of that money as possible should be oriented towards selling, growing the product, growing the market, paying people that you need to do that. You mentioned CMO, or, salespeople, legal advice, possibly. And you need to work out, what what else you might need, and the extent to which any of that is free or affordable. But I think I do it quite a lot with people. I have a period where I might work on a pro bono basis, on the understanding that they get to a certain threshold, and then I'd be expected to be reimbursed for my time.
Yeah, I think that's fair and realistic, because really a lot of early stage founders can't really afford to take that kind of help otherwise. Okay, Phil, thanks so much. I think people should be looking up your book. I know it's on Amazon, Angel Think.
Can I just flash it on the
yes,
screen?
Please.
Yeah. So here it is, and it's on Amazon. And my good news this week is that I got to 51 5-star reviews.
Congrats.
So I was trying to meet my own KPI of getting 50 5-star reviews, and I achieved it earlier this week. So
awesome. So people should they go to the Amazon page, or do you have a website for it? Where should I link them?
Yeah, go to Amazon.
Okay.
Yeah. I mean, I'm you can link with me on LinkedIn, Phil McSweeney, but if you're interested in the book, then Amazon.
Cool. We'll have that link in the bio of the description. Sorry, of the podcast. Phil, thanks so much. This was very very interesting and very useful, I think, for startup founders. And thank you.
Yeah, no, it's been great to speak. Yeah, and thanks for the opportunity again. That's good.
All the best.
All right. Cheers.
Cheers.